Hi folks, this is Craig, the Options Linebacker, and this is the weekend report for Saturday, September 5th. We'll start out this weekend's video by walking you through where I see the market going in the short term, and then we'll finish out the video by discussing some of the positions we currently have in play. So right now what I have here is the monthly chart of the S&P 500. So it goes all the way back to about 1995 back here, and you can see this blue trend line shows all the major lows along these several years on the monthly chart. And what's interesting, as we pointed out last week, is the price has just come back up to backtest the bottom of that trend line as of August. Now right now what we've gone through in the past 6 months feels like the market's going to go straight up here forever. But we know that that's not the case. The market does not go create a new lower low in this case, which it did as of March, and then suddenly turn around and create a higher high. We're just not going to see that. We're not going to see that kind of V-shape here. There will be some wave structure to it. So the question is, at some point we're going to put in, on the monthly chart, a lower high. So we're going to have some kind of wave structure like this, whether that lower high happens up here or it could happen down here at this trend line. And then after that is what's really going to be the important part, because after that lower high comes in, will it then create another lower low, or will that create a higher low and start working higher from there? So markets move in waves, as you can see, instead of just in straight lines all along. Now I'd like to call your attention to what happened after the last recession back here in 2000, which bottomed out around 2003. The market shot up off the bottom, and actually, as we measure this based on fib retracements, it came right up to about the 50% fib retracement. This took about a year's worth of time, so that was about 12 months straight up there from 2003 to early 2004. And then you can see once it hits that 50% fib, it kind of went into a sideways to down pattern that's almost like a bull flag for several months before it resumed the uptrend. Now what's interesting to note here is that this final move that came off of the March 2003 bottom up to the early 2004 top at this point was about 371 points on the S&Ps. How far do you think that this move is right now? It's gone about 372 points. So we've made an identical move up off the bottom. Actually, this one in a lot shorter time because we went down faster. If you throw a ball at the ground, it's going to bounce back up faster than you left it. So this rebound has been totally in character at this point and has gone about the distance predicted so far. So is this time for a pause? Perhaps. Let's take a look at the weekly chart and see if we can see anything further. Now when we look at the S&P from a weekly chart perspective, it's a little bit different story. So we can see that there's been some nice wave action here. We've had wave 1 up the bottom, wave 2. We're in the middle of wave 3 coming back up here, or this could just be the ABC correction. We don't know that at this time. The price has come up to the 38.2% retracement of the entire bear market. Now, the thing that stands out to me here is that it looks like on the weekly chart it's got some unfinished business above. So here's the 50% retracement, which we talked about, which is usually what a bear market will come back and retrace, which is already what the NASDAQ has done. The second thing that stands out to me is that these weekly bars here offer really no overhead resistance. This is sort of an air pocket that was caused during the crash. And what we typically see is that we'll see this, you can see this 1, 2, 3 pattern breakdown here, which is right around that 1120 area again. And it also lines up with this descending trend line, which matches all of the highs, the significant highs during the bear market. It looks like the weekly chart is telling us that there's some overhead targets that are yet unfulfilled on the S&P. So again, we have the monthly and the weekly charts kind of saying something different right now. The monthly saying that maybe things are done for right now and it's time to go into consolidation. The weekly chart saying that it still has some overhead targets that are about another 100 points overhead. Now what can we pick up from the daily chart? Well, the thing that I pointed out last week is that on the daily chart you can see that we've had some strong moves up off the bottom, consolidation, another strong move but not quite as strong, a faster consolidation, a weaker move up, and we can see that this thing is starting to coil and consolidate now. So perhaps it's time for a little bit of consolidation, perhaps even to the 38% retracement of this particular rally. And this is what the ADX indicator is telling me right now. So after we've rallied very strongly from mid-July into a very strong value of trend, which the ADX shows, it's showing right now that this is coming back down and that we actually have been consolidating for about a month. So this is what I'm expecting to see, is consolidation perhaps for another 2 to 4 weeks before the next trend will actually reveal itself. So to finish out this video, let me quickly cover some of the positions that I have in play or are thinking about. Right now we have the bull put spread for September, which looks great. This is on the IWM. I'm showing the Russell chart right now. We also have this butterfly in front of it. This is a defensive trade, such that if the price does start to roll over and start coming after this put spread trade down here, this butterfly is going to gain value like crazy and will actively defend that spread trade. We also have an IWM 51 naked put for September. That's looking good, as well as an IWM 50 naked put for October. So those are well out of the money and just cooking time value right now. And in the S&P 500, I don't have any September positions currently, but I do have an October position, which is a bull put spread down here at the 87 strike. So that's an 85-87 bull put spread. And I'm looking for my bear call spread, which I will be filling early next week. Details in the newsletter. Because we've had this strong market since March means that I've been adding some swing trades to my portfolio as well too. This is the RSI 2 strategy, such that when you have an RSI with a timing value of 2.0 on it and it goes below 2.0, you go long. And so that signal showed up this week and we would have already been out of it by Friday. Nice swing trade. And here's another swing strategy that we added this past week, which is called the double 7 strategy. So when we see a 7-day low, we will buy. So this signal showed up here. We bought that morning out of the gate, and right now that trade is looking very, very good. As well as this one, we bought here on this morning, and right now this trade is just a little over break even right now and looking good. So there's all kinds of different ways to play the market, between selling Iron Condor options or selling naked puts or playing swing trades. Come join us. So with that, hope you're having a great holiday weekend, and hallelujah, college football is back. Take care, folks.